Let's see how this look. All right, I think we good now. Boy, that's cold-blooded, you hear me? You hear me? Boy, that's cold-blooded. Boy, that's cold-blooded right there. So let me see if I can go. The thing said YouTube crashed on me, you hear me? How that thing crash on me? That thing said crashed on me, you hear me? I had to get right. They tripping, you hear me? You can't crash on a Trapper. How YouTube crash on me? You don't crash on me, yo. You don't kick my door in. You hear me? Listen, y'all. We jump back right quick, you hear me? We jump back like a 4.5. We jump back like a 2.25. You know what I'm saying? For some reason, y'all, I just got a notification that my YouTube crashed. Nah, I don't know what that's about, you hear me? But, nah, they on the wrong level. He don't play with me like that, you hear me? Take a sip one time, red cup one time, you heard me? For me being a plug, you feel me? Red cup one time for me being a plug, you know what I'm saying? And go and get that thing, you hear me? Red cup that one time, man. Ah, what's good, family? You hear me? What's good, family? What's good, family? Y'all already know. You know what I'm saying? Y'all already know. We back. You know what I'm saying? Trap House really jumping, you know what I'm saying? Feds investigation over with. You know what I'm saying? We beat the charges like Rocky. Shout out my guy T. Frederick for the super chat. You know what I'm saying? Sue Woo in the building. You already know, fam. I love you. You heard me? You know what I'm talking about? But listen, y'all. We back, man. We in the building. Trap House jumping. You already know. You know what I'm saying? I got my trappers on over here. Trappers with good salute. We back in the Trap House. You know what I'm talking about? I got the cousins over here in YouTube world. Y'all already know, man. I love y'all. I rock with y'all the whole way. I'm going to drink to y'all again for that. Y'all know what it is, man. So today is officially, man, it's Trappin Tuesdays, man. Y'all do me a favor. Share this with somebody. Share this with somebody. You know, let's get our numbers up, man. 1,500, 2,000, you know what I'm saying? Let's get our numbers up. Y'all already know what the business is. And so while I've been off, you know what I'm saying, getting things back in order, I said I'm going to start dedicating Trappin Tuesdays to educate more. You feel me? To taking a few gems from what's going on during the week, but really getting into education, right? To really getting into feeding the trap, how I'm supposed to feed the trap, like no one else can feed the trap. Listen, you know, people gonna come on, you know what I'm saying, in this game, man, and, you know, everybody can invest. You know what I'm saying? But what happens is, you know, the wordplay, the verbiage, you know, that people use, it can oftentimes, you know, go over everybody's head, right? And that ain't what we here for, right? Me, personally, my mission and my goal for investing and bringing this platform to the world and introducing us into investing and making it digestible for everybody is speaking it in our language. You know what I'm saying? That's my goal. That's my objective. That's what I'm sticking to. You know what I'm saying? I had a little time to go back while I was in a transition. I was still, you know, putting it together while I was in a hotel, while I was somewhere where I was getting a spot. I was like, you know what? The mission got to go. You know what I'm saying? The mission got to keep going, right? Because can't nobody break down a trap like I break down a trap. I don't care who it is. You know what I'm saying? I don't care what their background is. I don't care where they come from. You know what I'm saying? Nobody don't speak our language. You know what I'm saying? And so that's what we here to do, man. And so I just want to tell y'all, that's what I'm here for. That's what I'm dedicating it to. You know what I'm saying? Me personally, I got so into, I'm not going to lie, you know what I'm saying? I got into doing so much and trying to do so many things and then so many things happening. You know, I had to just get back to the basics of, man, what the people really love, man. What the people really here for. Why do people really rock with Trapper the way they rock with Trapper, right? It's because Trapper spit the trap gospel. You know what I'm saying? I come from where we all come from, man. So that's what I'm here for, man. That's what I'm here to do. Y'all know when I got the shades on. Y'all know when I got the shades on. Y'all know when the red cup come out. Y'all know what we doing. You feel me? So what I did was, since I got back with my group members, I got them back on deck. I'm reorganizing some things, how I'm gonna do some things, right? So what I'm gonna do is, from now on, what I'm gonna start doing is, until I get the studio finished how I really want, what I'm gonna do is, before Trappin Tuesdays, what I do is I make a post in the group and I tell them to put their questions up. Now, normally I'm gonna take 5 questions for now and 5 questions for later for the group, but I'm gonna just take 10 questions out of the group. I'm gonna answer them tonight live. I'm gonna say who asked the question, but also I'm gonna break down just some game and some knowledge that we need to be doing as investors. So do me a favor, man. Appreciate everybody in right now. We 5 minutes in, man. You know, the feds kicked the door in, so they had shut us down. We had to get the proper paperwork to open the shop back up, to let them know we official. We ain't bootlegging nothing. You know what I'm saying? We all good. This gambling shack is official. You hear me? This trap house is really jumping like the caller. With no further ado, let me say, I'm not a financial advisor, nor am I a fiduciary. Everything that I say is for entertainment and informational and educational purposes only. Take none of what I say as personal directions for what you should be doing for your specific portfolio. Know that all investing comes with risk, and in order to mitigate the risk, you must be able to do proper research. Proper research is what allows you to be able to identify great investments from bad investments, not what trappers say is good, not what trappers say is bad. Know that I am not responsible for the performance of your portfolio. Only you are. Please, please, please seek out financial advisors, professional financial advisor, or professional help. Because I am not that, I know one by the name of Rashad, one part of Earn Your Leisure. He can take you to glory. I personally can only take you to the trap house. Again, he can take you to glory. I personally can only take you to the trap house. With that being said, trap with me! Trap with me! You feel me? Shout out to my guys at Earn Your Leisure, man. I heard, I tapped them for a minute, man, but I heard they set it on fire last night. I love coming behind those guys because it allows me to get busy. It allows me to go hard. It allows me to know that I gotta do what I gotta do if I'm gonna keep on pushing the culture the way I'm gonna push the culture. And trust me, I am gonna push the culture. I do want to tell everybody who have, you know, consistently rock with me up until this point, I want to tell y'all I appreciate y'all so much, you know what I'm saying, because it took me a while to get here. Went through a lot of adversity on the way, man. Lost somebody real close to me. Had a couple people in my family get under depression. Just went through some things, man. And through it all, I did my best to stay on point. And I appreciate everybody for just rocking with me through that. And I promise from this point on, we going up. You did. Trap house jumping. So, check it out, man. So, man, we got a lot to talk about. A lot of things happen, man. Let's get to it, man. Let's get busy, man. Let's talk about it, right? So let's just talk about today. The Dow Jones finished minus 222 points, right? The S&P finished minus 10 points, right? And the NASDAQ finished plus 0.64 points, almost 1 point, right? That's cool. One of the things I want to talk about for sure is yesterday, right? So yesterday, something really happened, right? Something really serious happened yesterday in the market. We saw the Dow Jones drop by about 800 points, right? But before this happened, I literally got into the group and I said, listen, Travis, I said, check this out. I said, this was at like 8 o'clock before the market opened. I said, listen, things are gonna get real today. I said, I'm looking at the futures market, and so the futures give us an idea of what's probably gonna happen that day, right? Going into the market. Shout out to Ian because he on the futures real hard. And I said, we're gonna have a hell of a day today. I said, but nobody should panic. Everybody should load up the clips. And we should see if we're gonna get some deals that come about. And so that's one of the things we're gonna talk about today in Trappin Tuesdays. We're gonna go to school, so I want everybody to have trapper attire is required. You know that. Trapper attire is required. Again, trapper attire is required. So, and I said, man, listen, so one of them days we need to just sit back, don't panic, right? Because when they panic, we eat. And so I told the trappers that, and lo and behold, the tech bubble went down 800 points. So let's start with one of the things, and I took some notes because I wrote down some of the questions and things that some of the trappers asked me. So I definitely want to be able to put that out there so we can talk about some of those situations. I am up on YouTube, family. I got 641 people up right now, fam. 683 people. Let's get that to 1,000 people right quick, fam, for sure. Let's do that right quick, for sure. Let's get that popping, right? So one of the things I wanted to tell us is simply this, man. And one of the things we need to know is that when we see the market fall, let me see something. When we see the market fall, oh, hold up. Which one is up? All right, well, I guess that ain't it. Let me fix that for y'all right quick. So I can make sure y'all right. I can't have both of them up. It's just showing me one of them. I'll fix it. We'll get to it. Do me a favor if you on right now, just tell the other people come over here, man. I don't want to stop in the middle while we talking, man. We busy right now. You know what I'm saying? YouTube said it crashed on me, so but I'm not gonna really do. They kicked my door and they had no permits, you heard me? So, but basically, so if we see the market fall 800-900 points, right? One of the things that happens is that's not even 2%, right? So because that's not even 2%, we shouldn't be panicking about that, right? We shouldn't even be panicking about the market going down 800 points, 900 points. We shouldn't be panicking about that. And the reason why we shouldn't be panicking about that is because that doesn't even equate to, 5%, right? That don't even equate to 5%. We're not even tripping on the market. We're not even tripping on the market falling if it ain't 10%. You know what I'm saying? We not even tripping on that if it don't go 10%, right? Because we got to understand where the value is at, where the deals are at, right? And so I wrote this quote down by Warren Buffett, and he says that it's better to buy a wonderful company at a fair price than to buy a fair company at a wonderful price. Right? Let me say that again. It's better to buy a wonderful company at a fair price than to buy a fair company at a wonderful price. So let's break that down. Let's break that down to exactly what does you like trap like. What that mean? Like, what's a wonderful business? What's a fair, like, what is that? All right, so I'll give you an example, and I'll use two companies that are similar, right? Cisco, right? If you know about Cisco, is a tech company, right? It's a tech company that's in a tech business, right? It's a fair business, right? Company doesn't have a lot of debt. The dividend is actually pretty good. Really decent management, right? A decent market share in the software business, right? So it's a fair business, right? So the thing is, if that business goes on sale, right? And if we look at the track record of that business over the last 5 years, we'll really see that the business itself hasn't really blown us out of the water. The business hasn't really ran away from its competitors, right? It's a solid investment, right? It's a fair business, right? But if we compare it to a business like Qualcomm, right? A business This is a wonderful business. Well, Trap, what makes this business better than that business? Okay, so let's talk about a few things. It's another great business, right? Great management, right? Nice dividend, low debt. But let's think about how Qualcomm has set itself up to be one of the better businesses in the 5G component moving forward, right? It's setting itself up as one of the broad-based businesses, one of the better businesses that'll be in the 5G arena moving forward, right? Let's talk about that. Great management, doing great deals. If we look at the stock price on how Qualcomm has risen over the last few years, we'll see it has grown exponentially compared to that of Cisco. Again, Andre Hatchett was good, King, right? So again, now we're looking at a fair business compared to a wonderful business. So here's the deal. If these two businesses go on sale at the same time, for me, Qualcomm will be the better business for me to invest in. Why? Because if I get Qualcomm on a discount, right? If I get Qualcomm on a discount, then what happens is my return on invested capital, or my return on investment, my ROI will be greater because we see the bigger picture, right? We see the potential. We see how Qualcomm is steady putting itself in position to score easy buckets, while Cisco is really just playing conservative. It's like a coach on a team. It's time to kill and win the game, and they won't go conservative, or they'll punt the ball on 4th and 1. Well, you got another team like Qualcomm is like, yo, what? It's 4th and 1? Man, we going for it. It's overtime? We going for it. You want a team like that. You want a management team that's want to execute. You want a team that's ready to go for the gusto. That's what you want. You want a business, a management. You want a company that has a great moat. You want a company that has low operating expenses. All of these things do great for Qualcomm and not as much as for Cisco. Again, I'm saying Cisco is a good company. It's a business to have in your, it's a business that you have in your portfolio. It won't run away. It won't lose much either. It'll just give you solid performance. And that's cool. But for me, I would rather a business that's going to give me a better performance track, a business that has a better track record. So that's why that is essential. Why did I bring that up? Because just because we see the market go down, just because we see days that the market goes down 800 points in the Dow Jones, that doesn't really excite me, right? That doesn't excite me. That doesn't make me say, man, the market is on sale. Nah, I could wake up in the morning and see all red, right? But if I don't hear a circuit breaker go off, like we talked about in March, right? A circuit breaker going off or something, then I'm okay. I'm looking for other deals, right? And let's talk about that as well. I told my guy, Rashad, I want to say this was Monday. Let's take a sip to EYL, man. Take a sip to EYL. Shout out to everybody that felt that breakdown just now, right? Y'all rocking with that breakdown just now? Sweet, right? So let's talk about that. Right, so I told Rashad something, man, and I'm saying that to get us into this situation. Here, what I want to say is, I told Rashad, I say, man, listen, what we saw between March and September was one of those once in a lifetime things. Right, it happens I'm not gonna say once in a lifetime. It's one of those things that happen every 5 years, 6 years. Right? Remember, I had been waiting for Chipotle for 3 years. And people ask me all the time, like, how could you wait for that long? Because I studied the greats. And Warren Buffett told me that it's better to buy a great business on sale. So for me, I want to have as many great businesses as I can in my portfolio. Because having a great business in my portfolio puts my returns on steroids. You feel me? Whereas you can buy a certain business and it's not going to run for you, but it's a solid business. Whereas you buy a great business at $425 and in 4-5 months is at $1,300. You feel me? This is why we buy great businesses on sale. So one of the things what I don't want us to do is this, and I'm going to be real with you. The way the market ran up between March and September, it put a lot of people it put a lot of people in the position where they think the market is going to always run like that. Sadly mistaken. The market doesn't always run up like that. We just got into a situation and we saw some, things happen. You know what I'm saying? Right. Unrealistic expectations. Those things don't happen like that often. Shout to hitting 1K, man. I appreciate y'all, everybody who came in here. We had some YouTube difficulties, so I appreciate everybody coming through and coming back, man. We good here. We good here. And I want y'all to know the market doesn't really run like that too often. You get runs, but not in that short time span. So it put a lot of people in these unrealistic expectations, right? It made people think that they can get rich overnight, and that's just not how the market runs. The market doesn't do that. This is a game that is meant to be played, right, over the long term. And so before I go any further, let me answer one of the questions from my trappers. So I got some questions I'm gonna answer in the middle, periodically through this. I got some things I want to talk about as well. So one of my trappers asked me a question. He said, shout out to my trapper because I'm answering their questions, right? So trapper said, he asked me, he said, Trap, what made you stay long-term prior to starting to teach it? Because I know once you acquire the knowledge, folks had all of these short-term ideas for you, whether it was penny stocks, options, swing trading, whatever the case may be. What made you confident that buying and holding was a great long-term play and strategy for you? So I think that's an awesome question, man. I think that's an awesome question. So let me answer that question by saying this, right? So before I learned the long-term investing game, I saw people doing like penny stocks and stuff, and I was just like, it was just confusing to me. And I'm gonna be real with you, I was already in the street, right? Just being 100% real. I was already in the street. So because I was already in the street, I was already making quick money. So it's something, I don't know, it's something about the way I was wired. Well, I was taking enough risk in the street. I didn't want to take risk any other way, right? Just being 100% real, being 100%, transparent. You know what I'm saying? So when I got into the market, I was just like, what can I do, to just let my money just work for me all the time? Like, well, I don't gotta be, working for, because if I was in the streets pitching, so I didn't want to have to do the same thing in the market. And when you trade, from my experience, you have to watch the market. I didn't want to have to do that, right? I wanted to be able to put my money there and then just continuously doing what I was doing, right? And so in the beginning, I'm not gonna lie, I made a lot of mistakes because I was investing in just, things I heard, and people always hit me say one of my worst investments was Ford, right? It was one of my worst investments ever. So once I started understanding, like, oh, this game is designed for me to win, right? This game is designed for me to win. Like if I can grasp it, if I can understand, if I can let these multi-million-dollar, multi-billion-dollar CEOs who went to college to run these businesses run my money for me, why would I do anything else? Why would I go against what's working? So when people came to me with, yo, we can do this, we can do that, I was like, man, I'm good. I'd rather just own it and go about my business. Real talk. I'd rather just own it and go about my business. Well, I ain't gotta watch it every day. I'd rather let them just run my account up for me. Like, one of the hardest things in the world to do is start a successful multi-billion-dollar business. That's not easy. That's not easy to do. So if they already good at it, why would I intervene? Why would I act like I know what? I'm gonna just understand and learn why you making this business this way. I'm gonna just understand what it took for you to do this. And once I can understand, you done already did the hard work. Once I understand how to, I'm gonna put my money here, and I'm gonna put as much money in here as I can so you can flip that for me. It's kind of like me having a pack and me saying, you know what? I don't really want to hustle. And I done had dudes do this to me in the street before. Say, Free, look, man, I got these 5 bands, bro. Look, you pitch this for me, you give me what I got back, to cop it, and we split the profit in half. All right, cool, we could do that. Matter of fact, I'm gonna take 60-40, bro, because I'm doing all the work. Same thing in the stock market. It's literally me telling them, look, here, go Here go my money, go flip it for me. All right? And they cool with it. And I ain't got to give them 60-40. I found out what the PE ratio is. The PE ratio is 18. Then that means I'm giving them $18 for $1 of their profit. If the PE ratio 40, then I'm giving them $40 for $1 of profit. Cool. Understand what the PE ratio is? That's what I'm giving them for that much of their profit. Okay, cool. Next, and I'm going to keep going. So I hope I answered your question, my guy. I hope I answered that question for you real well, Trapper. I'm gonna answer one more question before I get into something else. One of the trappers asked me a question. He said, hold on, I got y'all questions wrote down. So I got 10 questions from the trappers, y'all, so give me a minute. Okay, so one of the trappers asked me, Trapper, what do I think of PagerDuty? They beat earnings, they have very little debt, debt to asset. Hold up, let me say that again. Trapper, what do you think about PagerDuty? They've beat earnings 3 quarters in a row. They have very little debt. They have increased their revenue and gross profit the past 3 quarters. Their clientele consists of Dropbox, Carnival, Datadog, IBM, Cloudflare, and their primary service, he mentioned a few more, IBM, he mentioned a few more companies. Their primary service is identifying issues that occur within the company and their platform, and they fix the business for them before they can even identify what the company can identify what the problem is. Man, the trappers got questions, man. The trappers got questions, man. The trappers got questions. So let me drink to that. That bitch went down the wrong way, y'all. Damn. It's that holy water. It's that holy water. God damn. Shit. That bitch went down the wrong way. That shit made my eyes red. So let me answer that question. Shit. God damn, bro. God damn, bro. That's a hell of a question, you heard me? Shit. So let me answer your question, family. So when I did the research on that business right quick, I just did a quick rundown on that business. Yeah, I'm good, y'all. That shit just went down the wrong way. Shit. Excuse me, you heard me? That's a hell of a question. He getting it out me, you heard me? So what I do want to say about that business is, shout out to the king for answering me that question. That was a great question. So one of the things for me, just briefly looking at it, for sure, it's that holy water, yeah. Oh man, oh man, I love y'all, man. I'll tell y'all for real. So one of the things about that business that I saw was that it didn't have any economic moat, and it didn't have any moat whatsoever. So for me, that's an automatic no. The reason why, if a business doesn't have a moat, for me, why I stay away from it, is because that means it can be taken over by its competitors. That means it's not really better than its competitors, right? So for me, I don't care how good a business is performing. I don't care how great they are at increasing revenues. If they don't have a moat, for me, it's a no-go, especially an economic moat. So now I went to compare it to its competitors, and I saw that it didn't really have an advantage. One of its greatest competitors was SAP. The revenue has increased, but the earnings per share growth for the business, DG, was a -23, which is something I don't like, right? Not saying for you not to invest in it. I'm just saying me personally. One of the other things is when I compared it to SAP, I saw that SAP was a slightly better business, right? It was a slightly better business. It had better return on equity. It had a better return on invested capital, right? And the growth rate was better, as well as the earnings per share growth. But SAP had a little more debt. The great thing about the business you asked me about PagerDuty, they didn't have any debt, which was great. Family. The company SAP had a little more debt. So when I start digging into businesses, and I start looking at how much debt a company has, here's a gem for you. I want to make sure that if they do have debt, debt is not bad for me. But if they do have debt, I need them to be able to pay the debt off within a 1 to 2 year time span, right? And so SAP can actually pay their debt off in a matter of 2 years. So just comparing those two businesses, I typically like the SAP a little better than PD. But I'm gonna be real with you, that is not an industry that I am particularly fond of. A business that just finds solutions for other businesses, unless that business has some type of, if it doesn't have the economic moat, it has to have what's called a switching moat, which means once they get their clients tied into their services, it's hard for those clients to come up out of that business, right? And so because they don't have that, for me, I stay away from it. You know what I'm saying? So that was a good question too, Trap. So salute to the Traps, man. Let me take my time with this one here. We'll take our time with that one here. So I hope y'all got a lot out of that breakdown. Shout out to everybody, man. Do me a favor, man. Like this video, like it, and share it. Let's get the likes up. We at 1,000. My goal now is to start getting 2,000 people in here again. We was doing it before I took the time off. So let's definitely get it back to 2,000 or more people. So that was real great questions about the trappers. Definitely want to talk about that. So today, something else great happened today, man. Something great else happened today, man. We are seeing a big shift right now in the chip sector. And we'll talk about that for a minute. Let's definitely talk about that. Let's break that down for a second. Intel for the longest was a giant. Marlo Mitchell, shout out for the Super Chat family. Definitely appreciate that. We saw that Intel had been a giant for a long time in that sector, in that chip sector for sure. But I'm not gonna say that they've fallen off, because when it comes to the data center part of their business, they still have 95% of the market share. So that's huge for them to have 95% of the market share in the data center business, and we'll talk about that as well. But we do see the likes of Intel, NVIDIA, TSM. Those companies are coming all strong. Shout out to AMD for having a female CEO, and she has literally just turned that business around in about 5 years. I'm gonna be real with y'all. So I personally don't like the word humble. Like, it's not a word that I'm cool with, because I think that word makes people want you to downplay who you are or downplay your greatness to satisfy or not shine on them, or as a way to keep you in a box, right? The reason why I'm saying this is because AMD CEO, when she came in the game, she said, before I leave here, we will be the #1 chip business out. We come to dominate. And you got to be bold to say something like that, right? You got to be bold to say something like that. I remember when I first started this, I said, yo, like, I'm gonna make stocks cool for everybody. I'm gonna be the #1 stock channel out. That's strictly stocks, like no other page gonna beat me. I'm gonna outread, I'm gonna out-educate, I'm gonna out-learn, I'm gonna outperform everybody. You know what I'm saying? And I meant that. And when it came to just putting things out there and putting information out there and breaking it down, like I was dedicated to that. Now, of course, once you start doing that, a lot of other people are gonna come into that market, and a lot of other people are gonna come challenge you. And you gotta be willing to say, man, that's that ain't nothing. It is what it is. You know what I'm saying? It is what it is. Y'all better team up. You know what I'm saying? Cause we gonna run this thing. You know what I'm saying? And so I'm saying that because what she's done the same, like she's done that. You know what I'm saying? She's put herself in position where, man, she coming for him. She coming for him. So she said, I rank her up there with Kathy Woods. Kathy is amazing. And so she's a great thing, but she's turned that business around in a short time span. Appreciate you, family Jedi. Appreciate that, King. And I appreciate that. So I want to show you all something. If you look into the SMH holdings, what you'll see in the SMH holdings is that TSM, Nvidia, Intel is number 3 with a 5% holding in there. And then you'll see ADM at number 10 with a 4%. But what I want you to understand about that is this. That is going to continue to rotate, right? So because it's an ETF, right? Because it's an ETF, it's going to rotate, right? It's going to rotate. And what I mean by that is the ETFs are only going to change positions out once a year, right? So they're going to see what companies is performing better, and then they're going to put more of their money. They're going to take money from one and add it to another. Don't be surprised if you're looking at SMH this time coming in next year. You're going to see them taking some from that Intel, putting it in ADM. You'll see ADM go from the number 10 holding to that number 5, 6, 3, 2, 1. You'll see that ETF rotation. And that's important for us if you're investing in ETFs. One of the things that's great for you to look at in that ETF is the ETF rotation. Where are they putting more money at? Where are they allocating more money at? Right? You see Nvidia now is number 2, but 5 years ago it was like number 5. Right? And so as they see that growing, as they see that business growing, as they see that market share growing, what they'll tend to do is say, okay, cool, because and that's how the ETF performs well. The ETF performs well because if you have more of your money, if you got 10 companies and you got $100, right? So you got $30 in this company, $5, $10 in here, $8 in here, you broke that down. Wherever you got the most money at, if that one is performing better, then the ETF will perform better, right? So if you got more money in TSM and Nvidia, because TSM and Nvidia holds 6 and 5 and 6 heavy 5 and 6% inside of that ETF, then if those companies are doing well, then they're gonna carry the boatload of that ETF, right? So now if you see that Intel is declining, you'll probably hold it because they hold 95% of the market share inside of the ETF. But if you see AMD is performing better, you're gonna take some of that money from Intel and these other places, and instead of Intel being your number 3 position, you may drop it down to your number 6 or 7 position and increase AMD to your number 3 position, which will make the ETF perform better. God damn, that was gangster. Man, let's sip to that breakdown too. Woo. Let's sip to that breakdown too, man. So one of the things too, man, we'll notice that is that, so when it comes to chip makers, right? So chip makers, so we know that we transitioning, we know we shifting, we know that technology is shifting to something different, right? So now we got to ask ourselves, where's the shift happening at within this technology sector, within this? So where's the shift happening at? The shift is happening 2 ways. The shift is not in smartphones anymore. The shift is not in PCs no more. It's in AI. Travis said, I get paranoid every time you sip that cup. Me too, it's that holy water. So the shift is in AI. The shift is in automotives, right? AI, automotives, and gaming. No, and data centers, right? So that's where the shift is coming at. So now you'll see these chip companies, try to fight Intel on their data center thing. And so let's talk about this. Who are some of Intel's biggest clientele? It's massive when it comes to data centers and cloud computing. Amazon is their client, Microsoft is their client, Google Cloud is their client. And these are the biggest players in the game right now. Right? So Intel has that on lock with 95% in data center. That's huge. But they losing the war everywhere else. They losing the war everywhere else. And when you compare earnings this week from Intel to AMD, you'll see the difference. Shout out to the family, man. Jared, man. Shout out for the super chat, man. Appreciate that, family. So that's amazing to know. That's amazing to see. When we come in and we tapping into businesses like that, you always want to pay attention to where the shift happens at. And so now I want to break down something that we need to know, and something that I feel like we need to understand also, and it is, what are 5 key factors that get into risk tolerance? This is important for us. So I know you like Trap, like how we go from that to risk tolerance, and because what I've learned and what I've noticed is that and it just made me think about yesterday, right? Yesterday, I noticed that a lot of people feared that crash. A lot of people feared that market going down. But here's the thing. It's not the market crash or the downturn that you fear. You fear your lack of having a strategy. You fear the lack of having an actual investment strategy. And because you don't have an investment strategy, you don't know what to do. Because you don't have an investment strategy, you don't understand how exactly you're supposed to navigate through the game. You don't have a strategy. And because you don't have a strategy, because you don't understand how to play the game, you panic. Think about it. Why are most people confused? Because they don't understand. The only thing that can confuse you is something that you don't understand, right? So because you don't have a game plan, and here's the thing, a person with no game plan, a person with no strategy will always 100% lose in the long run to a person who has a strategy. So if you go fight somebody and they've watched all your tapes, if you don't knock them out in the first couple rounds, then what will happen is, over the long term of the fight, technically, they'll outbox you, or they'll outfight you, because they have a strategy. They know what to expect. Well, the first 3 rounds, if he don't knock me out, he or she never been around 6, 7, or 8. So if I get around 6, 7, or 8, I know what to do. Okay, he's strong with the right hand. Let me turn, let me do this, right? Okay, he like to do strategy. Right? And so we do understand that building wealth is a revolutionary act, right? If we understand that building wealth is a revolutionary act, the only way that we can be successful at a revolution is with strategy. No successful revolution has happened without strategy. It's cool to be brave and have this bravado, but with no strategy, you always lose. You always lose. So let's talk about 5 things, and I think I'll get into these a little deep. Let's talk about 5 key factors that affect your risk tolerance. 1, time frame. Time frame. What is the time frame that you have, with your investing strategy? What is your time frame? Right? If you're investing for the short term, then you can make the least amount of mistakes. If you invest in long term, then you can commit, You can let things happen. You can let things play out. You don't have to panic. You can watch them go. Time frame. The number 2 is risk capital. So what happens with this is risk capital is how much capital can you risk at investing, and if you lost it, it doesn't affect your day-to-day living. Another reason why people get scared when it comes to investing is because they're investing money that they can't afford to lose. Don't let that go over your head. One of the things that people panic about is because they're trying to quick flip their money in the market, which is why I'm not worried about stop losses and all that, because I'm investing for the long term. So if I'm investing long term, and if a company I buy goes on sale, then it's only right for me to buy more. I'm not trading, so I don't need a stop loss. Just being real. The market goes up 3 times to 1. I don't need a stop loss with long-term investing. I need a stop loss if I'm trying to make quick money and flip. I'm just saying. It's a big difference. Right? Number 3, investment goals. Like, what are your goals? What are your goals? What are your objectives? Right? And so let's talk about this too. Let's talk about something, the difference, knowing the difference between your goals and your desires. Right? Knowing the difference between your goals and your desires. One of the things is people don't know the difference between the two. So here's my goal. Some of my investment goals is this. I'm starting another business, the Trappin Apparel Inc. Right? And the reason why I'm starting Trappin Apparel Inc., one of my goals is to have my cousins run my business for me. Right? So we can be integrated vertically and create a form of nepotism, hire my own people so they can run and work my business. That's a goal for me. Another goal for me is to have enough money coming from stocks and investments to pay for my life. That way I don't have to work for it. That's a goal for me. What happens is your desires get in the way of your goals. So you go after your desires. Desire to have a fancy car or a fancy house. So you get that before you accomplish the goal, and the desire sidetrack the goal. So now you've accomplished the desire, but not the goal. So we must have investing goals and put the desires to the side. Make sense? So set your investing goals. Experience, right? So the only way to become a great investor is through experience. We got to stay in the market. Time in the market is better than timing the market. We can't try to time the market. Let's not try to do that. Let's just be in the market. Let's play the market. Let's understand the market. Let's get in the game. Let's shoot the threes and miss them. Let's do the layups and miss them. Let's get beat a couple times. The experience is what makes us better. Being through the March 23rds, being through them marches, being through them lows, seeing those circuit breakers go off. All of those things prepare us for the future. Okay, cool. If this happened again, now what I do? Revert back to 2020. You feel me? We revert back to 2020. In 2024 or 2025, when this happens all over again and something else happens, instead of us panicking, you know what we said? I remember what happened in 2020 in March. That's what I'm going to reflect back on. I remember going to market Mondays. I remember watching Trappin Tuesdays and tapping in and understanding how Trap and how EYL how they told us to navigate through this market. And because of that, I'm now educating myself. So we go with time frame, we go with risk capital, we go with investment goals, we go with experience, and the last thing is attitude. What is your investing and risk attitude? So what is that, Trapper? How are you affected? Hear me out. How are you affected when your investments go opposite of what you researched? That has happened to me. But here's the thing. If I know I've done my research, because here's the thing, no investment that you make is 100% guaranteed, right? No investment that we make is 100% guaranteed. No investment that we make, because remember, all we doing is looking at numbers, looking at what CEOs say, looking at what management says, looking at, we looking at data. And we letting the data help us make decisions. So if the data has helped us make decisions, and we've got into this decision based on our data, not what Trapper said, not what nobody else said, if that goes opposite and we've done the proper research, personally, I can live with that. Because my research and my data has helped me more than it has harmed me. It's like a pitcher, right? Let's say a pitcher has a fastball, right? And 99.9% of the time that he throws or she throws this fastball, it's a strike, right? It's a strike. Like, can't nobody hit it. Until one person gets up to bat and he looks and he says, I'm gonna knock this joke out the park. I'm gonna catch him. He done struck me out 8 times. I'm gonna catch him. And he catch him. It's out the park. Does that make the pitcher stop throwing a fastball? Hell no. Because he struck out 52 other batters before him. Trust the research. Trust the research is something that I want to say tonight. And I'm going to do something for y'all that I never did before, right? Just because I said from now on, Trappin Tuesdays, we go next level it. Right? As y'all can see, I didn't come on here, talking about a lot of stuff in the market. We talked about some market stuff. I'm answering questions, and I'm going to just dig into teaching. That's what I'm going to get back to. That's what we need. Feel me? And that's what I'm on. So I appreciate everybody who rocking, man. Do me a favor, like this and send this out, man. I told you what we doing. So I'm gonna tell y'all something that I did, and I usually don't do this, right? And it's important for me to do this because the reason why you must trust your research is because it is, right? This is why you gotta trust your research. A great company, man, write this down. Check this out. A great company is not a great company. Scratch that. A great company is not a great investment if you buy it at the wrong price. Say it again. A great company is not a great investment if you buy it at the wrong price. Sometimes we just gotta let it simmer. We just let it simmer. We don't react to it. Sometimes we gotta just let it. We just gotta let it sit. Right? We just gotta let it sit. Let it sit. So I did something, right? And it's something I normally don't do. Never even did this in my group before. Right? So I wanted to show people this. So I literally went in my research because I told people when Apple had the stock split, I said, listen, don't make a big deal out of this, right? If you want to buy the stock, buy it. if the stock goes down, just buy it again. Don't be confused, right? Don't be confused. Don't let this game confuse you, because the game is not supposed to confuse you. It's supposed to amuse you, right? I said it again. This game is not supposed to confuse you. It's supposed to amuse you. You're supposed to have fun if it's running or if it's going down. Either way the cut go, you're supposed to be amused by it, not confused. It's not that type of game. The reason why people are confused is because they lack strategy and they half-assing it here. So this was something I did, man. I got into my research, and I'm about to do something I never, ever, ever, ever do. Ever do. So you take this and you do what you want to do with it, right? Trappers, y'all tap into, man. Then I'm going to answer some more questions. I literally broke down Apple stock to the T, all the way down. When I say all the way, I mean, I got in my Excel spreadsheet and I just crunched numbers. I just went to crunching, because I wanted to bring value this week, right? I wanted to set the record straight that Trappin Tuesday is that place. You know what I'm saying? And this ain't no fugazi, it ain't no me spitting nothing. This real talk right here, right? So right now, Apple is worth $2 trillion, right? It's worth $2 trillion. I'm gonna say that again. The market cap on Apple is worth $2 trillion. It's a difference between a company being worth it and the market cap being that. So the market cap on Apple right now is $2 trillion, right? After I crunched my numbers, I came up with an evaluation of Apple of $1.6 trillion. Said it again. After crunching my numbers, I came up with an evaluation of Apple at $1.6 trillion, which means it is about, what, $400 billion over market value. It's overvalued. It's overvalued. Right? It's something I never did before. So now what you have to do is ask yourself this. You take 1.6 trillion, you multiply the outstanding shares by so many stock prices. So you start at 90 and work your way up, and you get to 1.6 trillion. Once you get to 1.6 trillion, whatever stock price times the outstanding shares give you 1.6 trillion, that, my friend, is the price that you should be willing to pay for Apple. That price or lower. There you go. Something I've never done. Yes, I am. I got everything coming, Ryan. Everything. Got a whole studio set up coming. I just gave it to you. I just gave it to you. This is something I've never done before. Something I've never done before. Never. Ever, ever, ever. But I just wanted to just give y'all some real game. And one of the things I told y'all is this. When we invest in a company, we own part of that business. So when I evaluate a business, I don't evaluate how much I should pay for the stock. I evaluate how much I should pay for the business, right? So if I was to buy Apple, I would give them I would tell them your business is not worth 2.2 trillion. I mean, your business is not worth 2 trillion. Your business is worth 1.6 trillion. So anything under 1.6 trillion, 1.6 trillion is the most I would pay. Anything under 1.6 trillion is what I will give them. So you would take the outstanding shares, multiply that time numerous stock prices. I'm not going to tell y'all the stock price. Whatever stock price gives you 1.6 trillion, that's the fair price that you should pay for it. Anything under that is below value, and that's you getting it at a deal. That's something I've never done before. I just took y'all inside my books. I just took y'all inside me crunching the numbers. I just told you what Apple was worth. There you go. It's time for you to do the math. It's time for you to do the homework. It's time for you to do the homework. Don't worry about so somebody said the moving average is $98. My trappers, y'all know one thing. We only look at moving averages to say what people have paid for it. The moving averages do not tell you value at all. I promise you. Moving averages do not tell y'all. That's the difference between me and a lot of people. I'm not going to lie. Moving averages don't tell you value. Moving averages only tell you what people have paid for the stock over 200 days, 50 days, whatever average you're looking at. That's what moving averages do. They tell you how much people have paid for the stock over that course of time. Which brings me to this question from one of the trappers. I hope y'all took that information and used it. Let me know if we trapping tonight. Let me know if y'all feeling how we rocking tonight. This gonna be the next thing moving forward. This how we rocking moving forward, yo. We just giving game, man. We just teaching. Real talk. I'm in teaching mode. For my trappers, when we do Trappin Tuesdays, I will answer. I told y'all 10 questions. I'm gonna answer them live so y'all can have them. Our class so our book club is Thursday. The book club is Thursday. We reading principles. We get into that, and then next week we're gonna start the live from the kitchen sessions, and I'll post in a group tomorrow what sector we gonna start with. So we'll definitely start with that. And if y'all wanna know what live from the kitchen is, live from the kitchen is something I'm doing with the trappers. So they have 11 sectors in the market. Basically what we're gonna be doing is once a week, what we'll be doing is, so let's say I say this week we in the financials, right? So it's your turn to, oh, I missed the super chat, my bad. I wasn't even, look, I just was so into teaching, I wasn't even worrying about it. Well, I guess I missed it, my bad. I was so into teaching, I wasn't getting it. So one of the things we're gonna do, so let's say we take financial sector, right? So this month we'll do financial sector. So every week what we'll do is everybody in a group, so we at 3,000 people in the community, everybody has to pick one business and just research it. So when we go live in the group, it'll be a Zoom call. I will pick one person. In that group, I'll probably pick about 4 or 5 people. I'll pick one person. You'll have to say what business it is, and you'll have to break your business down. Once you break your business down, now myself and the other trappers will ask you questions about your business that you'll have to answer, right? And this is not to shame or harm anyone. This is to help us get better, everybody get better at researching the business, right? And so we're gonna do this once a week, every week. It's gonna be a live class every week. We'll go through all 11 sectors, and then we'll keep starting over. It's gonna be something we do every week. I want that. And the reason why we're doing that is so the trappers can just get into just the idea of what it takes to really research a business, man. Shout out to everybody who wanna do that. If you wanna get in Trappers Anonymous, just DM me the word trapper while, after we get off here. Mr. Truvillian, I appreciate that, family. I appreciate that. He said, you're a genius, man. We trapping those days off. For sure, man. So that's going to be called Live from the Kitchen. I definitely I'm still getting my studio together, but now it's not going to stop me from just banging out. So if you want to get into that, definitely shoot me a DM on Instagram. Trappers Anonymous. If you get it for the whole year, you actually get 1 month free. No, we don't cover candlesticks. We will have a few technical analysis classes in the group, but we really don't need technical analysis like that here, because we are actually fundamental investors. So let me answer a couple more questions, man. How y'all feeling tonight, man? How y'all feeling, man? Y'all feeling, man? Y'all good? We trapping? We trapping? We trapping? Are we trapping tonight? Are we trapping tonight? Trappers, how y'all feeling? How y'all feeling? We trapping? Y'all glad to be back in the group? Y'all glad to be back? For sure. We good for sure, man. I just appreciate y'all, man. So let me answer some questions right quick. Somebody asked me, what are your thoughts on electronic vehicle industry and the ticker symbol NOI? So I think EVs are a great, I think it's the future. I think EVs are the future. I think the Tesla has a huge advantage on the industry as a whole, which is why I actually own about 250 shares. My daughter owns like 100. As far as NOI and these other businesses, they aren't exciting to me. If you're looking for a growth stock, Tesla is the best of the bunch. And I feel like why the stock is not even $500 right now. I feel like you have time to save and invest to get into that business, watch it pull back, find the value in the business. You can, I think around 300 would be a great spot to get it at. If you can get it there, if you have the patience to get it. And from that point, I think that's where I would want to be at. I would want to be at the person, especially in this is a new industry, right? And so if you're going to invest in the electronic vehicle industry, you want to be in Tesla. And if you want to find some of the subsidiary businesses, then plug some of these businesses may be where you want to be at if you don't want to put a price point in on that. Maybe ARKK, if you wanted to get into that, to get exposure to it. But the NOIs and the other businesses, I just stay away from them personally. Someone asked me, another trapper asked me, Trapper, your watch list for next year, is it contingent on who will win the election? No. Answer that. How often should we switch up our watch list, yearly or quarterly? Great question. Great question. So my watch list is my watch list. I don't care who in office. Because my watch list is so broad, right? I literally got over 250. I literally have 250 stocks on my watch list. So for me, when we did the research, we've looked at this. We saw that Democrats typically give the stock market better performance, right? Democrats typically, 186 is not the answer to that Tesla question. Not at all, brother. That's the wrong answer, man. So you buying it way overpriced. My watch list has over 250 stocks on it right now, right? But my watch list is predicated around my personal circle of competence, right? It's around it's not. If you're paying 186 for it, if the stock is 113 right now and the market cap is 2 trillion, 186 would put the market cap at about 2.1 trillion. If the company is only worth 1.6 trillion, you're paying too much for it, family. So my watch list is predicated around my circle of competence. We've learned that Republicans and Democrats both make the market go up. We've also learned that Democrats have made the market perform better by 1.6%, right? So that tells me no matter who's in office, what's gonna happen? the market is going to go up. But we do understand, we broke down last Trappin Tuesday that I said it's not 186. We said that certain industries may go a little bit more, but overall, you know, the market's still gonna go up. So that's one thing I said before, is a good business is a good business no matter who's in office, right? A great business is a great business no matter who's in office. A wonderful business is a wonderful business no matter who's in office, right? So for me, what we need to do is always check your watch list. Like I look at them every quarter. I run through my companies, you know, I run through them, and I have my watch list set in different tiers. Like these are the ones I'm heavy on, these are the ones I'm middle on, and these are kind of the ones I just, I like certain things about it. So my watch list actually has 3 different tiers. And so for me, what I basically want to do is say, okay, how are these businesses performing? And the reason why I have to keep watching them is because I always reevaluate the businesses and the strike points at which I'll buy them at, if that makes sense, right? So I may have a company set at this price, but in a year, I have to reevaluate that business, right? And so because I got to reevaluate that business, that stock price may change on it. You know what I'm saying? It's going to change on it. And so I'm going to reevaluate it so I can get that stock price, so I know when this falls, if it falls inside of my calculation, I can hit it dead on. So it's always good for me maybe once a year to reevaluate my watch list. But it's not really predicated on who's in office, because again, businesses with strong moats, businesses with low operating costs, high return on equity, high return on investor capital, providing great value to shareholders. These are the businesses that I love. So, you know what I'm saying? So I hope I answered that question for you. Had a couple more questions. Let me answer another question. It's kind of the same question. Okay, Jesse Shorts asked me a question, man. Shout out to the family. He said, oh, look at my trappers. They doing any homework in that group. Trap was like, what? Trap just put them numbers out there. I'm going, get that. For sure. So one of my trappers asked me a question. He said, Trapper, what does profit margin mean? Good question. Great question. So profit margin is a great tool to use when investing in a business, right? So basically all profit margin is telling you is what is the percentage and what's the rate that your company turns sales into profit. Let's drink to that shit. Profit margin is basically, you know, and somebody said they could have Googled that, and that's true, but sometimes you just need sometimes you just need somebody to break it down for you. And that's what we here for. We ain't here to judge. We ain't here to trip, you know what I'm saying? We here to help everybody. That's why I say we here to teach, right? We here to teach. That's the goal for like everybody on different levels. So we cool with teaching, man. So I appreciate you for asking that question. There is no dumb question asked when it comes to investing, because a lot of us are new to this, right? So there isn't a dumb question. There isn't a crazy question. I don't care if you could have Googled it. You decided to ask me about it. And why did you decide to ask me about it? Because you trust my expertise. You trusted that I can, you know, give it to you in a way that you can digest it better than maybe Google or whatever. So I'm going to give it to you. So pretty much profit margin is simply what percentage that the business can turn sales into profit. So let's say your business has a 45% profit margin, right? So that means that for every $1 that they generate, 45 cents of it comes to them in the form of profit. Simple. Quick and easy. We ain't even gonna beat around it. We ain't gonna try to make it longer than what it is. We ain't gonna try to dress it up to make me sound fancy. None of that. Basically, that's what profit margin is. You know what I'm saying? That's what it is. So if you're looking at your people, if you're looking at your businesses and you see the profit margin is 30%, and you say, okay, for every dollar they make, they take 30%. If you see the profit margin is 55%, then you see for every dollar they make, 55% of that money, 55 cents go into their pocket. You know what I'm saying? That's what we doing. That's what profit margin is. You know what I'm saying? So we want to understand that. So that was a great question. And the last question I'm gonna answer for the night is, Trapper, is it better to dollar cost average, long term, or stash the cash and wait for it to hit your number? So one of the things I'll say to that is this. Shout out to Ian, because Ian is a fan of dollar cost averaging. Basically, dollar cost averaging is you buying a business every month at a certain price, at a certain time of month. That's your thing. I'm not a fan of it. But again, every investor is different. Every investor is different. That's why I say you got to come up with your own strategy. So what happens in the why I'm not a fan of dollar cost averaging is because I'm not a fan of buying stocks over value. Call me a cheapskate, right? I'm the dude who like to buy deals. So what dollar cost averaging does is, so let's say this month you bought a stock at $100. So you bought 10 shares of the business at $100, right? So you spend $1,000 this month. Well, let's say next month the stock is down to $90, so you bought another 10 shares. But then let's say next month the stock is at 115, so you bought another 100 shares, right? And then let's say the next month is up to 125, so you bought another 10 shares. And then next month the stock is up to 135 and you bought another 10 shares. And then next month it goes down to 115, so you bought 10 shares. And then next month it's up to 155 and you bought 10 shares. So what happens is, with dollar cost averaging is, more times than often, you'll be buying a stock overpriced. And that's not something I'm good at. But the thing about dollar cost averaging is this: you will effectively be a part of the business and you will be getting in the business over time, right? So that's the pros and cons to it. The pros is you'll stay effectively being into that business. The con is, more often than not, you will be buying that business overvalued, right? For me, I am a buy it at a discount and then averaging down. Two completely different things. And I think I'm gonna start this series on YouTube called Whiteboard Wednesdays. And every Wednesday I'll post a video with me being on a whiteboard. I think I'm gonna start that. Let me write that. Whiteboard Wednesdays will be a YouTube. I can put that out there, right? So for me, I would rather stack the bread, right? I would rather stack the bread. I'm not a dollar cost averaging person, right? I don't like the dollar cost average. It's not my thing, but I'm not against it. Remember, every investor is different. You know, everybody gonna have pros and cons. So if you with dollar cost averaging, do your thing. I'm not against it. Me personally, my way of investing is completely different. So for me, I would rather, like I told y'all, we found the value of Apple. Once we found that value, what I'm gonna do is every week I'm paying myself first. I'm putting money up. I'm putting money up. I'm putting money up every week. I'm putting money up every week, right? Every week I'm putting money up. 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 I see the value of all my businesses. I'm putting money up. I'm putting money up. I see the value of my businesses. The thing about the way I invest, it may take you 2 years. It may take you 3 years to get into that business. I waited 3 years before I got into Chipotle. Waited 3 years. But when I got in it was a hell of a discount. I waited a year and a half to get in Lululemon. But when we got in, it was a hell of a discount. Every business that I got in March, I had been waiting at least a year for it. Except for Qualcomm. When I got into Five Below, I had been waiting like 2 years to get in, maybe about a year and a half to get into Five Below. Right? Those were 3 businesses I got in with 0 debt. I had to wait because they was running. Right? But when I got in them, did they run for me? And now I'm good. Right? And you let them run, and then once they get to a point where they way overvalued, Chipotle was a great lesson for me. You're patient for like 4 years. Yeah, 3 years I was patient for it. And that's what I mean by the game is designed for us to win. See, one of the things that this game forces us to do is going to force us to do one or two things. Be patient and be like, dang, man. Or it's going to force us to invest. I always wanted to have control of my wealth. And I never wanted to let this game force me to do anything. Right? And so one of the things that's hard to do, especially as a new investor, is to see a great business that you love just running. Like, that hurts your spirit. Because what happens is you be like, you know what? Man, I'm about to jump in that bit. I'm going to get some of them gains. And then what happens? You jump in that bit. And I don't know if you like me, but the minute I invest in the business, it goes down. The minute I think it feel like it be waiting for Trapper to invest. As soon as Trap get in on it, the business go down. I just feel like every business does that with me. Like, Trap got in there, oh, it's going to go down. So, you know, you just got to be willing to say, again, it goes back to your strategy. Again, it goes back to strategy. That's why tonight was so important. Strategy, goals. What type of investor am I? Right? What kind of investor am I? For me, I can let it run. It's running, all right? I remember when Beyond Meat IPO, I wanted to get in it so bad because I knew that alternative meats was the new wave. I saw it. You can kind of see things happening before it, happens. You see it like, damn. But because I didn't have enough data on it, I couldn't get into it. The thing shot to $200 in my mind. I'm like, bro, I could have got this thing at $25. You tripping, right? It ran, but after 16 months, it came all the way back down to $68. I talked to David Shands on the phone. I said, Dave, it's a go. Dave got it. I wound up getting caught up. I didn't do it. 2 days later, I got it. I didn't get it at 68. I got it at 88. Right, in 2 days, it shot up like 20-something dollars. I got in at 88, but I got like 200 shares of it. And it just been running ever since then. But I was able to collect enough data to get me where I wanted to be at, right? So I let the data tell me. And once my data tell me and I can crunch my numbers, at that point, I've done what I was supposed to do. Remember what we talked about in the beginning, right? Letting the data dictate to you what you gonna do and how you gonna play it. And then once the data dictated to you, I don't gotta go against that. You feel me? So, man, I hope y'all enjoyed tonight, man. I wanted to just give y'all some game, man. Look, we checking for 83 minutes, man. That's amazing, man. That's my longest one ever. That's my longest Trappin Tuesdays ever, man. I just wanted to tell y'all that I appreciate y'all for just, hanging with me this long tonight, man. Creole King, how should people close to 50 years old be investing? I'll answer that question for you, family, no problem. Especially because he sent the super chat. So at 50, you got to ask yourself at this point, what are your goals between now and the next 5 years and the next 10 years, right? Because we praying that you're a healthy 50, right? We praying that you're a healthy 50. We praying that you got another 20, 30, 40, 50 years left in you right now, right? So, but we know that you're, older than us. So What happens is, what we want to do now is you want to ask yourself, what are you investing for? Are you investing for passive income? Are you investing to trying to generate some wealth for yourself right now? Do you want to leave some wealth behind? Let's ask yourself that question first. Now, if you want to invest for income, so now you're saying now you're gonna have to start putting a little more money. You're gonna have to start taking a little more risk than most people. So what you're gonna have to start doing is look for some of those high growth stocks. If you want to cash out with dividends, you want to get some of those dividend stocks that are paying great dividends. Um, and you want to try to get into some bonds, because what bonds will do will give you that once a year passive income. So you got to ask yourself first, and people don't want to do that part, but it starts with identifying what your goal is and what type of investor you are at heart. So it starts right there, man. So, man, I just want to tell y'all, man, I appreciate everybody for tapping in tonight. Man, it was a great night, man. I feel like, we setting the tone for something great is what we're going to be doing moving forward. Just giving a lot of game, man, getting back into the teaching component of it. Can you run options through Cash App? I wouldn't do that. We're going to just get back into just educating more. Let's get these things up to 2,000, 3,000 people in here, man. So I want y'all to just do me one favor, man, and just tell everybody what we doing right here, what we doing. Shout out for the super chat, family. I appreciate that for sure, man. Shout out to everybody that we do that. So let's do that. My trap is asking me a question. What y'all asking me over here, y'all? Jillian said, how about if we all ask, he got to see one of us? What's the question is, family? Jillian, what's the question? Hey, Trap, how did you calculate that? Use them ratios from that Wall Street Trappin course. Use them ratios. All them ratios. Use them ratios. Break them things down, man. I got something coming with that though. I'm gonna do a mentorship where I bring people just inside of how I break stuff down. So that's what that's doing. We're gonna do that. But with that being said, man, I just want to tell everybody, man, I appreciate y'all. I love y'all. If you want to join Trappers Anonymous, man, shoot me a DM that says Trapper. Trappers, we got our class. They want them notes on that Apple breakdown. Yeah, I went deep in the trap on that. Shoot me a word, DM me the word. When this over, you'll see the link at the bottom. You could just join. You get 1 month free if you get it for the year. Trappers, y'all know the book club is Thursday. Next week we will start with. Next week we're gonna start on the live from the kitchen. I'll give you a date and a time, and I will also give you all the actual sector that we're gonna start with, man. So with that being said, man, I love y'all. I appreciate y'all, man.